Today's video is inspired by a recent entry I wrote in my Life and Money journal on the money mindsets that carried me to my first $100,000 and beyond. One of the mindsets I shared was this: learning to optimize what little I had. By simply building these habits over the years, in 2025 alone, it covers a meaningful part of my expenses, similar to the amount of dividends I collected. When I first started working, my salary wasn't a lot. I didn't have much to invest, and maybe the only head start I have was graduating without a student loan. What I did have quietly working in the background was the habit of spending only on what truly brings me joy, while optimizing the rest of my idle cash. Earn a little here, spend intentionally on what brings me joy, or reinvest it so my money grows a little faster. People often tell me earning $100 on idle cash is so small. What's the point? But I disagree, because if you can't manage what little you have now, you won't magically manage it better as your net worth grows. How you handle small amounts of money is practice for handling bigger ones. So in today's video, I'll share with you the instruments I look out for to build this interest income, so you can kickstart something in 2026 as well. Without further ado, let's dive straight into today's video. Let's go. Before I break down, I just want to say, please don't fixate on the amounts that you see here. We're all in very different seasons of our money journey. I might have more liquid cash right now as I'm saving up for a property next year, while you might have already invested most of your liquid cash into the stock market. Or you have decided that 2026 is the year that you're going to save up and build your base. That's completely okay. What matters more than the numbers are the tools that I'm about to share with you. Pay attention to the instruments that I'm using. These are the tools you can go and research further, understand how they work, and see if they fit into your own money system. This video isn't about comparing numbers. I'm just sharing with you what worked for me. The cash right now I have sitting uninvested makes up of what I call my baseline fund, plus any extra that I'm saving from my active income. So 12 months of emergency fund, I know it's more than average, but it's what gives me a peace of mind. And I also have 2 years of insurance premiums set aside. Should anything happen, I still want to pay for my health insurance policies, and I don't want to let it lapse. With emergency funds and short-term money like this, I don't invest it in equities or crypto, because you never know when the stock market is going to crash and when you're going to need this amount of cash. The worst position to be in is needing the money urgently and being forced to liquidate your investments despite whatever the stock market is doing right now. This layer of cash that I have is meant to protect the rest of my long-term portfolio. So if you take a look at this table, you'll notice 3 common denominators across the 12 months. Bank savings account, money market funds, and bonds. All 3 are relatively low-risk assets used specifically for cash savings and short-term money. For bank savings account, most of 2025, I was using UOB 1. However, since the start of December, which I've covered in this video, I've moved all of my funds to Trust Bank's savings account. They ran a 0.75% per annum interest booster if you funded 25k fresh funds by 30th November. I shared this in my Telegram community and in that video as well. But if you can pick and choose the interest categories, it can beat UOB1 interest, and it has a higher cap of up to $1.2 million instead of the usual 150k. I qualified for it, so the effective interest I'll be receiving is 2.95% per annum on up to $1.2 million. UOB1 savings account effective interest rate on $150,000 has dropped to 1.90% from 1st of December. If you're able to save, spend, and credit your salary, OCBC 360 may be a better alternative, though rates across banks can change anytime. Right now, what I do is that every quarter I will look around. If there are any accounts that is better, I will swap over. But most of the time, it will stay with one bank until further notice. That is for bank savings account. Money market funds, if you're not familiar, are low-risk instruments. They invest in treasury bills and short-term bonds, so your cash earns a stable return while staying liquid and accessible. If you ever need the money, submitting a withdrawal will take anywhere between 1 to 2 working days. I took part in Longbridge Interest Booster earlier this year as a new user for 60 days. And good news, if you're still new to them, signing up in December, only in December, using my exclusive link, or you can scan this QR code over here, lets you secure a 5% interest booster coupon for 1 entire year. 365 days on up to $5,000 parked in Longbridge Cash Plus. This applies to the iFast SGD Money Market Fund as well. Longbridge Singapore, if you guys have not already heard of them, is an MAS licensed investment brokerage platform with low fees for investing in the Singapore, Hong Kong, and US stock market. You're essentially just paying the exchange-related fees with the lifetime commission-free trades and coupons offsetting the platform fees. If you meet the holding period and trading requirements, you'll also receive Nvidia and Apple shares. By the time I release this video, there's only 3 days left to sign up. In addition to that, I'm also giving away NTUC coupons. I'll leave more details down in the description box below. Money market funds were especially useful for me because for many months, I couldn't fulfill bank account requirements like salary crediting while I was self-employed. If you're in a similar situation where you can't fulfill the requirements of a usual bank savings account, money market funds can be quite interesting as well. Lastly, we have bonds. Yes, bonds are not as attractive now as we are in a low interest rate environment, but market moves in cycles. So even if they don't look exciting today, it's still worth understanding how they work so that when we eventually move back into a higher interest rate environment and there are credible, safe bond opportunities, you're ready to act instead of scrambling to learn everything from scratch. These are the bonds that I currently hold and how much annual interest they pay, together with how much I've invested in as well. I shared more about how I started investing in retail bonds in this video, which is still relevant. I'll link up above and down in the description box below. But generally, a lot of people start off with Singapore savings bond that is issued by our Singapore government. It's a 10-year duration. Minimum amount to invest is $500 and up to $200,000. When you buy into a bond, you're basically lending money to the issuer. An example, if you've bought into the Singapore savings bond, you're lending money to our Singapore government for a duration of 10 years. Every 6 months, they promise to pay you a coupon, in other words, interest, and at the end of the 10-year period, they'll return you the capital amount you've invested. The latest issuance for December is 1.99%. Next month, I won't know what it will be, but you can check it out. I'll leave the link down in the description box below. These are the things that you can look into. As we head into 2026, Trust Bank Savings Account is what I'll be using for my cash savings. It lets me earn up to 2.2% per annum on deposits up to $1.2 million by crediting in my salary, referring one person to trust, and maintaining an average daily balance of $100,000. If any of these condition changes, I'll update you guys in my Telegram community, so make sure you join there for the latest update. And if there are any promotions similar to Longbridge 5% interest booster, I won't hesitate to make the most out of it. As for my bonds, they are not maturing anytime soon, so for now, they continue to do what they're meant to do, provide steady, predictable income for whatever that I've invested in. And that's it for today's video. If you have extra cash lying around, learn how to use these instruments to optimize it based on whatever promotions or whatever instruments that is available right now. If you have any questions, leave them down in the comments section below, or you can join my Telegram community. If this video has helped you one way or another, give it a like, subscribe, and remember, how you manage small amounts of money is practice for handling bigger ones as you grow your net worth. That's it for today's video. Have an amazing week as usual, and I'll catch you guys in my next one. Bye-bye.